Hey guys, welcome to another episode of Abe's Finance. Today we're going to talk about Biden's new infrastructure plan he's just announced, and we're going to do a deep dive as well as look at some potential trades where we can hopefully make a few bucks on. But they're just ideas at the moment, so I'll flesh it out towards the second half of the video. But first, we're just going to do a quick deep dive to see, the lay of the land of this new plan, and I'm pretty sure it's going to pass, by the way. There are bullish and bearish scenarios in this plan, but we're just going to go into the details of it first, and then we'll discuss which stocks or which sectors make sense for a trade. Now, let me get to the article. Well, before I get to the article, I just want to look at the S&P 500 right now. If you can see, it might be a bit small on your screen, but we haven't really had a big push since the announcement on we haven't had a big push on the S&P 500 or the Nasdaq or the Dow. It's been a muted response despite what the financial media is saying that it's positive. In my view, there hasn't been much of a response. We will see what will happen on the last day of trading before Easter. I think right now the stock market is at around 3980. We're 20 points away from 4,000. I think the S&P 500 will hit 4,000 probably by the end of the trading day. I'm not going to say it's going to break through, but it will touch it. So I think we're going to have a bullish session. Now, let's get into the details of this plan. So this is a $2 trillion plan, 600 billion. So 1/3 is going into transport infrastructure, such as roads, bridges, public transit, ports, airports, and EV development. And just a little bit more detail on EV, he's planning to build out charging stations across the country. I think 500K was the number that was put out. So that's a lot of charging stations. Secondly, he's looking to inject 400 billion to elderly disabled Americans. That's not necessarily so much infrastructure work. 300 billion into drinking water infrastructure, broadband, and upgrading electrical grids. I think that makes a lot of sense if this is the area that needs work in. So maybe you might specifically look at broadband, utility, electricity companies. That might be interesting. Next, we have 300 billion in new buildings and retrofitting affordable housing. So there could be some housing opportunities here. So we can look into that a little bit further. And then finally, 580, close to 600 billion in American manufacturing and research and development and job training efforts. So that sounds like a 600 billion in R&D. So if you can see here, it's mostly infrastructure works, building works, green energy, as well as manufacturing and research, manufacturing technology research. So it's actually quite a broad range of effects in the economy if you think about it. So that sounds really good, but it comes with some caveats. The tax rate is going to be increased from Trump's 21%, which he cut from 35%, to 28%. So that is going to have a material weighting on the stock market. Now, I just did some quick maths. That means, let's say a company is paying the full rate of tax, 21% right now. If that increases to 28%, then their profit of that, originally they're paying around 79% of all, they're retaining and only paying 21%, and they get to keep 79%. Now, in this new regime, they keep 72%. So that's about a 10% hit on the bottom line. So stocks, according to this, should drop 10%. So that's something to bear in mind. I'm looking at mostly bullish stocks, bullish opportunities in terms of trading. So, let's look into some of those trading opportunities. Now, just into a little bit more detail about where the market currently stands. We're seeing some bullishness, and we're pushing above 3980. So 3950 was pretty much a point where we struggled to push past and we weren't very happy with. Now we're pushing into 3980, nearly 4,000. So that's an interesting prospect. We've got a ceiling of 4,000, not far ahead. So that's something to keep in mind. Now the first one I have off the block is VNQ. VNQ is an ETF for housing. Now there isn't a dip to buy in this, but this is just to show you that it's kind of been underperforming the rest of the market. It's kind of been pretty flat. Let me just make this a little bit larger. VNQ here, and it's on the highs. But you might want to look at other builders, home builders, and this might be an interesting idea because relative to the market, it has been a bit muted. It's been a bit flat, so which gives some room to run up. And also housing, I know for a few months ago was very hot and still is to an extent quite hot. And if you're in Australia, it's extraordinarily hot, by the way. The average house price in Australia, in Sydney, just rose 50,000 in 1 month. 50,000. So that's crazy amounts. I mean, an average house is 1 million Australian dollars and it's gone up 50,000 in 1 month. So go figure. It is hot. Things are heating up across the world in terms of asset prices. Now, this is the first one off the block, and I know there's a lot of Tesla fans out there. I have a lot of question marks about the company. If you look into their books, there's things that will suggest to me that I don't really like to invest in this. But as a trading asset, if you look at it, we've just had a very significant dip from nearly 900. Now it's under 700. It's been chopping around here. I think the bulls have been getting in. If this green 600 billion in road infrastructure and charging stations is happening, it means that EVs are a go, because Tesla was the only one with EV capacity, really, with the supercharger network. Now, if all the car manufacturers can access a supercharger, while it might be more competition for Tesla, it does mean that more people will jump into EVs, and the trend, the adoption will take off. So that is one to look at, and I think the day traders will want to get in the action just before the long weekend. So that's one to look out for. ARK Invest is an interesting one too. ARK Invest, we are looking at mostly, I think it's something like 80% invested in Tesla. So you're basically buying Tesla. But there's also a lot of really advanced tech names that they do buy, such as like CRISPR, which modifies your DNA, and a lot of I suppose biotech and all sorts of stuff. Just disruptive tech that may or may not make profits right now. So, but look at this chart, massive dip from 160 and now 120. I mean, you might have got it at 110. Now, this is really speculative. This is a really speculative stock, but you know what? In times like this, if you want to get onto a speculative trade, there's probably no other one. And this is one that will benefit from this, future vision that Biden is sort of extolling and explaining in his plan. This is where we're going. And also, I want to add that it's only part one of his plan. He's got another one, and maybe there's even more tech and innovation in there. Now, I'm not going to sound like I support, the politics of it. I'm just looking at the plan itself, and this is where it looks like it's heading, $2 trillion. I might want to add, I don't think $2 trillion is enough. It's not that much money compared to, all the money that's been, printed and put in stimulus bills. This is nothing. I think you should go for 4 trillion. 2 trillion, I know it sounds crazy. It would sound crazy a few months, a few years ago, trillions and trillions of dollars, but it doesn't sound crazy now. I think we should go for more. And he probably will go for more. Now, clean energy, green energy is going to be more push. And maybe in part 2 of the bill, he's going to go more green. This is, in some ways, the Green New Deal that we've been hearing about for quite some time. And some people fear it. And, if it is what it is, like what is in his plan, I don't think there's too much to fear in terms of, level of socialism. Having said that, we are getting higher taxes, corporate taxes, which Wall Street's not going to like so much. Now, clean energy, this is another one that has dipped significantly since the early 2021, and we're getting a massive discount, highs of 33 approximately, and now it's 24. So it's dropped about a third, all right? And, you know, it's rotating in this area, it's finding some, it's catching a bid, it's not a falling knife. You got 200 moving average just below it. We on the low end of sort of, you can imagine the dip, the Bollinger Bands, the standard deviation, a lot of mathematical sort of ways you can look at it. And we are relatively cheap right now, just to put it most simply. So ICLN or QCLN, any of the clean ETFs, they're even better value than Tesla, because Tesla's only one company in this space, and green energy companies, if you get an ETF, you've got small American companies that are, you know, that's going to catch some of this funding. So you're probably going to get a bit more benefit. I mean, with Tesla, they're going to get more competition. This is true. So that might be a headwind, right? This is investing in those other clean green energy companies. And I think, you know, to be honest, maybe the market should show them some love too, not just Tesla. All right, I guess you can agree with me with that, right? Especially Tesla bulls out there. You know, it's good to spread the love. So QCLN, also a very similar outlook. I like ICLN a little bit better. It's had a deeper pullback. It's closer to support at the 200 moving average, that red line that you saw. So that's pretty good. Next up, with green energy, we're going to use a lot more raw materials. And copper is a big part of that mix. So a lot of the green energy tech requires copper and silver. We've just had a deep pullback with copper, one of the only pullbacks we've had in quite some time. So a very red hot market. And we're at the 50 moving average. I think this could be a go, especially if we're seeing some weakness in the US dollar. If you believe that the inflation story is real, and I just did a video yesterday about whether we're having inflation or deflation, I'm leaning slightly in the deflation camp. But, you know, I think that being wary of inflation and it, calculating as a real probability, I think that's wise too. I think there is a real probability that we will have inflation. You know, I heard an argument the other day that there will be deflation and inflation at the same time. Anyway, my brain's already busted just thinking about it, but the way they explained it was very true. So anyway, we'll go into that in another video. Silver, which I do like because it's a precious metal, the ultimate hedge against inflation and, you know, what the central banks are doing in terms of devaluing the currency. Right now, we're having a deep pullback on silver. It's still playing around 200 moving average. We're getting a lot of support here. We've had a lot of traffic and congestion here, a lot of volume, and that will act as support also. So I will consider this as two levels of support. So we are probably going to see, some support, a push back up, because silver is really, really heavily in demand for green tech. Unfortunately, I think that central banks like to suppress this metal because it signifies, it's like gold, basically. If this shoots up, it is a signal to the world that there's something wrong with the financial system. So they'll want to suppress this. So in this way, I actually recommend copper a little bit more than silver. So there you go. But if you like the precious metals too, go for that. And it's a hedge against inflation. And speaking of which, I want to talk about gold. Gold is like silver, but it is used by the central banks. And right now we are seeing it playing out. We are seeing a very heavy level of support. It's been dropping like crazy, but if we go back a long, long way, 1680 is a huge, huge level. since 2011. Let me get the weekly real quickly. The weekly charts, that's, yeah, it's this sort of area here in the middle of this range back in 2011, 2012. So we're coming back in this area of congestion. We're going to hit support again, and just like since last year in 2020, we're going to hit the support level. So that could be something to look at too. This is more of whether you think there's going to be inflation. It's not so much a play on the infrastructure, because I don't think we're going to be using too much gold building those roads. And finally, this is something just to finally look at. This is the US dollar. This is going to show our fears of inflation. And right now, there has not been a drop in the US dollar. And if the US dollar is holding its strength, that means that the market doesn't really think that this is going to cause a lot of inflation yet. I mean, it could turn around any day, but there has been a very muted reaction in the trading session after his announcement, after Biden's infrastructure announcement. Nothing's happened in Asia. Nothing's happened in Europe. US is about to open up, and when you watch this video, it's probably open. We'll see how it goes. Right now, the market doesn't really know what it thinks about it. But I do feel, and I do think that some of these industries, especially the clean energy stocks, have a great opportunity up. By the way, not financial advice for any of this. This is just trading ideas. I may or may not be trading this. I may or may not have invested in some of this stuff. Okay, and finally, I want to talk about oil. And you might be tempted. People might be tempted to short oil. Oh, what's going on here? To short oil, I don't recommend it, because right now we are at a massive dip. Let me get this order. Sorry, guys. We are at a strong dip at the 50 moving average. The buyers are coming in supporting this. The buyers are putting in their orders, and I think we're going to go back to 66. Maybe this will dampen this move and slow the move to 66, right? Because this is very green energy focused. But I'm going to tell you one thing. Now, there's going to be green school buses, green tractors, green trucks, green etc. But I will say one thing. They need to be invented first, or they need to be actually made first. When you build buildings and so on and so forth, to operate these cranes and to operate, whatever, I don't know, all the machines, the machinery to make buildings and so forth, but they use oil, they use diesel. So there's actually going to have increased demand on petroleum products for quite some time, despite what we might want out of this infrastructure bill. It's actually going to cause a lot more greenhouse gases. Trust me on this. And one more thing, if you're worried about inflation, Bitcoin. Now, Bitcoin is right now, I also want to just mention this for the sake of it. We're sitting just below 60,000, and we're heading into the Easter weekend. And I want to make a call on this channel. I think we're going to break 60,000 by the weekend, or the end of the weekend. I think the day traders are going to come in and give it a push. But we'll see. Do I think it's going to hold over 60,000? Not really. So this isn't a infrastructure trading idea. This is my own trading idea. I'm already invested in Bitcoin. I bought a couple of times on the dips. That's pretty much it. I have mentioned in one of my videos before that I think it's slowing down, and it might dip again, it might dip further down. But the truth of the matter is, we're heading into Easter. Everyone is going to be at home, and they're going to be sitting around with the stimulus checks, with money, not knowing what to do, and they're going to have a gamble on Bitcoin. They're going to have a play. So I think it's going to head on up. So anyway, that's my video for today. Good luck with today's trading session coming up. I'm from Australia, so I won't be pretty much trading it until maybe the first hour or so, but we'll see. But if you're trading, good luck trading out there. And if you like the video, hit the like button and subscribe for more videos like this. I usually do news/trading, and then finally, hit a comment for any feedback you want to give me. I really appreciate that too. Anyway, with that being said, happy Easter, and take care. All right, I'll see you in the next one. Bye bye.